But we've seen a big rise in China stocks recently, followed by, just in the last 2 weeks, a big sell-off, as well as the renminbi depreciating significantly. And we know that China stocks are notoriously volatile. If we look at a chart showing the last 10 years compared to the U.S., the China stocks really make New York look very tame and stable. But how is this volatility going to affect the major flows of capital that we've seen going out of China, going into the U.S. real estate? $29 billion in fiscal 2015. JLL says that $4.7 billion of that went just to Manhattan. That's 39% of all foreign investment in Manhattan. That's up from just 12% in 2014. So a lot of growth, a lot of big numbers, money going over into U.S. real estate. And so what effect is that financial turmoil going to have? Well, let's look at real estate investing in the U.S. from the Chinese point of view when we have this depreciation in the renminbi. So take, for example, a hotel acquisition. They buy it now, they convert the Chinese currency into U.S., buy the asset. Let's just assume for simplicity's sake there's no appreciation on the asset. A couple years down the road, they sell the asset, convert their money back into Chinese renminbi, and they get more renminbi for their dollar because of the depreciation. Now we can add back into that the cash flows in the meantime, the actual appreciation on the asset, and you can see that U.S. real estate investing makes sense from a Chinese investor looking at depreciation. And so we've seen a flight of capital over the last couple of years as investors have been worried about the economy, but now this shakeup is starting to happen. So we're seeing investors that are picking up the pace. They're asking for bigger numbers. $3.7 billion hotel opportunity right now that is in the works. We've sold about 30 properties recently. We've got a downtown Dallas multifamily tower in process. We've got a $50 million West Coast master plan community coming together, and lots of opportunities. So they're asking for bigger amounts and they want to do it faster. How this is going to end up in the long term, we're not yet sure. We'll see how this financial turmoil plays out into the greater Chinese economy, and that will affect these investors' balance sheets. But for now, they want to get their money out quickly. And real estate makes sense. They've been investing in Chinese real estate for the last 2 decades. They understand it. And so when they go abroad, something new and different, it makes sense that they want to stay with real estate. It's familiar, it's bricks and mortar, they can touch it. So real estate makes sense.